So I'm going to carry on from where I left off. So right now we're looking at the cost of sales account. Cost of sales account increases on the debit side and decreases on the credit side, right? So when a customer buys, cost of sales increases. We only record when an item is being sold with cost of sales. So every time the company sells to a customer, we record, right? Inventory. Yes. So a customer bought goods worth 2,000 Rand on the 7th of May, 2025 cash. And the date you're gonna have the 7th of 5, 2025. And then details, inventory. Balance is gonna be at 2,000 Rand. Then number 4, the customer bought goods worth 2,500 on the 9th of May 2025 credit. Date, you're gonna have the 9th of May 2025, and then under details, you're also gonna have inventory again. 2,500. And then you close it off on the last day, which is the 31st of May 2025, and then you close it under the trading account, which is going to be 4,500. Looking at the sales account, sales, well, a sales account falls under the income category, right? It is used to record the income generated from selling your company's goods or services. So, transactions that are going to be recorded here are the transaction number 3 and 4. So here we're going to record transaction number 3 and 4 again, right? So sales increases on the credit side, decreases on the debit side. So when the customer buys, sales goes up, right? Yeah. The first one, which is transaction number 4, which happened on the 7th of May 2025. Details is going to be, since the customer bought using cash, details is going to be bank, and then the amount is going to be at 2,000 Rand. And then the next one, which happened on the 9th, 2025. Details is going to be account receivable since the customer bought on credit. 2,500. Then we close it off on the last day under trading account. 2,000 plus 2,500, that is going to be 4,500. I had to pause the video. I don't know where I left off. Then we're going to be looking at sales returns. Sales returns. The only accounts that are going to be recorded on sales return in this case is going to be account 6 and transaction 6. Actually, only transactions that are going to be recorded here. It's transaction 6 and transaction 7. So for every inventory item that is being returned by the customer, we're going to record it on the debit side. So the first transaction says that customer returned goods worth 1,000 Rand from the credit sales that took place on the 9th of May 2025. This happened on the 21st of May. So on the date, it's going to be 21 May 2025, and then details, it's gonna be account receivables since they bought it on credit. Account receivables. Receivables. Balance is 1,000 Rand. And then the transaction number 7 says the company returned damaged goods worth 200 on the 25th of May 2025 from the purchase made on the 1st of May. That was my bad. There's been a mistake here. Transaction number 7 is supposed to say cash sales, right? But whatever I did there is still correct. Okay, let me just explain again. Cash sales, right? That took place on the. Okay, the dates are fine. Okay, sorry. Transaction number 7 is not supposed to be here, but transaction number 5 is supposed to be here. Yes, transaction number 5, where a customer returns damaged goods worth 500 on the 20th of May 2025 from the cash sales that happened on the 7th of May 2025. Okay, that's where my mistake was. So I'm gonna say the 20th of May 2025 details, since they bought on cash, gonna be bank, and then balance it's 500 rand. Then we have to close it off. So you add the two together on the last day and you close it off. 31/5/2025. Trading account. 1,500.